Interest rates have been going up. Mortgage prices have been going up.
Sales sank more than 40% in April compared to the same time last year.
To bring inflation down, unfortunately, we have to cause some economic pain.
But could a correction finally be on the way for home hunters?
With many pointing to rapidly climbing mortgage rates as a key contributor.
This could be the start of a meaningful correction in home values.
At some point, it has to break, and that's what worries me.
Interest rates are going up, the stock market is tanking, and inflation is out of control. Hi there, my name's Andrew. Thanks for checking out this video. Today we're going to talk about some of these issues and get into, once again, what's happening in the Calgary real estate market. Let's jump right in with probably the biggest thing people are asking me about right now, which is interest rates and mortgage rates. So what's going on with mortgage rates? Are we gonna, see mortgage rates go to the moon? Like, how can they be so high? What is happening here? Let's get some perspective, shall we? So if you look at this chart here, posted 5-year mortgage rates for the last 6 months, it looks like it's flat, and then it shoots way up in the month of April. So that is causing a lot of people to freak out. But I wanted to, let's give you some perspective and zoom out. Let's look back. Where are rates today versus compared to the last 2 years? Well, look at that. Go back 2 years in time. You pull the chart back and you see that actually posted 5-year rates today are actually lower than they were like at the start of COVID a couple years ago. Interesting. So that doesn't look as scary. Let's go back a little bit further. 10 years. Again, you're looking at the far right where we are today versus everything on the left-hand side of that is where we've been in the last 10 years. You quickly see that, wow, we're probably still way below the average posted 5-year mortgage rates from the last 10 years. Interesting. Let's zoom out even further. 20 years. When you go back 20 years, it becomes even more obvious that where we are today is way below where most people have gotten their mortgages over the last 20 years. Not even close. And then, of course, if you take this all the way back to the furthest back we have data for this, about 50 years, you see that today's increase in mortgage rates, although it seems jarring right now because we're in the middle of it, is actually barely a blip on the radar of this long and up and down history of rates that we've seen over the last 50 years or so. So all that to say again that we knew that this was coming. It's just when we're in the middle of it, it feels a little bit weird, uncomfortable, and strange. Causes the market to sort of sit back and wait and see a little bit what's happening. But you really got to keep asking yourself as real estate investors, has anything fundamentally changed in the market? Has the supply and demand equation been figured out? Did we suddenly create that extra 1 million new properties required to meet the demand that we have in this province of Ontario specifically? No. So, nothing fundamentally has changed, but yes, in the short term, we're going to see some bumps in the road as we're navigating the new normal that we are in, right? Also, just another reminder, like when real estate prices go up in a market 20-30% in a single year or over multiple years, as we've seen in many sub-markets in the Ontario GTA area, naturally, we know that's not sustainable. We know that that kind of a pace is not healthy and it can't keep up. So if we see a bit of a pullback, which we're starting to see now in the GTA market, that's not necessarily a bad thing. Shifting gears, once again, talking about Calgary and why I'm so excited about investing there, why so many of our clients are. Let's compare how a rate hike might be absorbed in Calgary, the market of Calgary versus Toronto. Check it out. Here we go. Bear with me. There we go. Okay. So Calgary versus Toronto. Average price in Calgary, $500,000. A 1% increase in Calgary is about $200 a month for the average mortgage homeowner buying right now in Calgary. Okay. $200 a month for 1% hike. Not really that much of a big deal. But over here in Toronto, a 1% hike on the average price of $1.3 million is almost $600 a month. Okay, so that is a big deal for most people. Layer onto that the fact that, again, average incomes in Alberta much higher than average incomes in Ontario. Average prices in Alberta much lower than average prices in Ontario. Again, this is a generational opportunity that we have here in Alberta to invest, which we've been talking about a lot. Here's a new chart which you haven't seen in previous videos. By the way, here's a quick plug. If you're interested in Calgary and if you want to know the full story and the evolution of what's been happening there, make sure you go back and watch all the previous videos on my channel. Alberta versus Ontario, the shocking difference. So check this chart out showing the mortgage payment as a percentage of your pre-tax household income. So affordability, essentially, how affordable is one area versus another. So look at Ontario. Obviously, affordability has been destroyed in the past couple of years. The prices have shot up astronomically while incomes have not. On the other hand, as we've been saying, the opportunity in Alberta, specifically in Calgary, is how many superlatives can I give you? It's a generational opportunity, as I said. The cost of owning in Alberta on average is below, in 2022, is below where it was in 2007. Okay? We have an affordable housing crisis in this country. Problem solved. It's called Alberta. This is where more and more people are going to be moving and are moving to right now because the real estate is ridiculously affordable. Again, another way to express this idea, generational opportunity. Here's the home price index over the last 7 years or so for the 5 major cities of Canada. Toronto, Vancouver, Ottawa, Montreal. All these cities have had their moment where the prices have popped. Even little Ottawa, similar sized city, a little bit smaller than Calgary, but even Ottawa prices have soared. Look at Calgary, way down below there, starting to go up. Yes, we told you a couple years ago to get in. Prices have started to rise, but still, compared to everywhere else, ridiculously affordable real estate in Calgary. If all Calgary does over the next 3 to 5 years is catch up to where Ottawa already is today, think about that. Anyone who invests there today will get amazing return on their investments if that's all that Calgary does, is just catch up to where Ottawa is already today. Think about that. Oil prices and the Alberta economy. So many of you have commented and asked me to do something about oil and as it relates to Alberta real estate. I have avoided putting anything about oil into my videos over the last several months, specifically because the turnaround that has been happening in Alberta and the great momentum that is happening in the real estate market has been happening without oil. Okay, without everyone says it's a boom and bust city tied to oil, and to some extent that has been the case with Calgary. However, the economy suffered such a deep and painful recession from 2014 to about 2018, 2019 that the recovery that started to take place in 2020 happened without oil prices. And this is the first time, in recent memory that Alberta has been able to claim that, yes, their economy is actually growing and positive momentum happening, and it's not happening because of oil. And they've taken great strides in diversifying their economy in the province. But that being said, a lot of stuff that's happening, of course, in the world right now. There's a war going on. It's absolutely terrible what's happening. But these things all have an effect on oil prices, and oil is certainly still a major part of the Alberta economy and the Canadian economy as a whole, as a resource country that we are. So wanted to address it, and I'm doing that right now. All that to say, Alberta's budget. So there you have the budget over the last decade or so. You can see massive deficits. As I alluded to, the recessionary period that Alberta has gone through, very painful. But suddenly, again, the forecast now, the recovery is on. It's a remarkable recovery that Alberta has been going through. And this all happened before the recent jump in oil prices that we're currently in the middle of. So projected surpluses in Alberta, which is a very positive sign for the economy and the province as a whole. Projected surpluses there. You see just, modest surpluses, but a dramatic difference from what's been happening over the last 10 years. This is all budget. This budget that the province puts out is based on $70 approximately per barrel of oil, okay? It's based on $70 per barrel. Where is the oil price right now? Well, as of May 17th, shooting this particular video you're watching, oil is sitting shockingly at $113 per barrel, and it's been above $100 per barrel, as you probably know, for quite some time with everything, again, that's going on in the world. And I'm not going to get too in-depth, but I just want to point out to you this one thing, and that is, for every $1 increase in oil from the budgeted $70 a barrel oil for the provincial budget, Alberta will get an extra $500 million to their bottom line, okay? So if theoretically oil prices stay at just a flat number of $100 a barrel, which is a lot less than it is currently trading at today, and many pundits who are much smarter than me and who follow this space closely are calling for $100 barrel in oil, $100 barrel of oil, tongue twister, for the next few years. $100 versus 70, that's an extra $15 billion, okay? An extra $15 billion per year for Alberta. So this is a tremendous, huge, amazing positive. But even if that doesn't happen, they're still budgeting for, even at only $70 a barrel for oil, they're still budgeting surpluses for the next few years. This is tremendous news for the economy in Alberta. Wanted to show you this chart, which you probably have seen in other videos before, but I'm going to break it down and look at it from a little bit more of a detailed perspective to show you just how different it is investing in Calgary right now versus investing in Toronto. Not to say that you shouldn't continue to invest in Toronto. Toronto is a great place to invest. It will always be the number one place to invest in Canada, the number one city in Canada. But the reality is most people are priced out of Toronto now. And the other reality is that most people just simply, unless you're very, very wealthy or already in the game or have many properties, it's very hard to get cash flow negative properties, which is basically every single property in Toronto is the issue. Whereas Calgary, you can still get positive cash flowing properties. So let's compare. So entry-level condo in Toronto, one bedroom now, pre-construction, is about $720,000 on average. And there you can see the breakdown of all the numbers. It gives you about negative $1,000 a month on cash flow based on today's numbers, okay? We're dumbing this down quite a bit, I will admit, for this exercise, but it's just to show you a point here. Versus, you can purchase a condo in Calgary for half that price, and it's a 2-bedroom unit, including parking. And we have units like this available right now, and it's similar to many other units that we sold recently in many of our projects and past videos you've seen. That's going to give you positive cash flow instead of negative $1,000. It's going to give you roughly a positive of around $175 a month based on today's numbers. Okay, so you can quickly see that you can actually buy 2 of these condos in Calgary for $360 each, at the same price as buying one single 1-bedroom condo in Toronto. So we're going to do a comparison, right? And what I want to point out to you in this comparison is the return on your investment difference that you're going to get in buying 2 condos in Calgary versus 1 condo in Toronto, okay? So let's do that now. And so let's assume a 5-year time horizon. Again, we're dumbing this down a little bit with the numbers and the assumptions and stuff just to prove a point, but it's still valid. Let's assume 6% appreciation, which is the long-term average appreciation in most Canadian cities. 6% appreciation for a 5-year period. If you buy those 2 condos in Calgary, your 5-year ROI, including positive cash flow, mortgage pay down, and appreciation, your 5-year return on your initial investment down payment, 228%. Okay. In Toronto, same thing. Your 5-year return is only 145%. You say, Andrew, why is there such a difference? If it's a $720,000 and a $720,000 investment, why is there such a difference? Well, let's go back and show you. Closing costs in Toronto, you're looking at an average right now about $40,000 on a new condo. And your cash flow of negative $1,000 a month over a 5-year period adds up huge. Obviously, 5 years, 12 months a year, that's negative $60,000, $40,000 in closing costs. That's negative $100,000 on your investment that you have to overcome in order to do better than the investment in Calgary, which has essentially zero closing costs. And instead of negative $1,000 a month, you're getting positive $175 a month. Okay. So let's look at another way of looking at this. So let's say, okay, let's say you don't buy the Calgary thesis, everything we've been talking about. You say, you know what? I just think Toronto is always going to outperform every other city in Canada, which fine, fair enough. You might be right. Let's say Toronto appreciates at double the rate of Calgary. So the bull case essentially for Toronto, 6% appreciation in Toronto. And let's run the numbers where Calgary, the same $720,000 investment, only gets 3% appreciation. ROI 138% 5 years in Calgary versus 145%. Almost the exact same ROI. Toronto barely beats it, even with double the assumed appreciation rate, if that's where you stand on the matter. Let's flip it around and say you're the Calgary bull, where you've looked at all the numbers in the charts and the ridiculously cheap prices and below the long-term historical averages where Calgary is right now versus Toronto. And you're saying, you know what, Toronto is overinflated, and I think actually Calgary is going to do better than Toronto over the next 5 years. So 6% appreciation Calgary, 3% Toronto in this case, gives you 228% ROI Calgary versus only 56% ROI over 5 years for that Toronto investment. So the key takeaway I just want to give you with all this is that Calgary's superior cash flow plus the no closing costs, that is so huge, as closing costs have ballooned so much in Toronto in the past few years. Wasn't always like this in Toronto, but it is now. It's a huge ROI advantage for Calgary over Toronto. So something to think about as you're wondering where to invest your money right now. So Calgary checks all the boxes, the headlines. It's way cheaper than Toronto, positive cash flow in Calgary. It's one of the most livable cities in the world. It's a great city to live. Calgary has a growing population. The city is alive and growing, and more people are moving there from all across Canada because it's the most affordable place to be, especially from Toronto and Vancouver. So many people are moving to Calgary. You can sell your home in these cities, buy the same home in Calgary, and retire right now with the money that you have left over. Calgary has the youngest population in Canada, the highest incomes in Canada, and currently it's projected to have the highest GDP growth of any province in Canada. The bonuses, as we call them, are all these little things like no land transfer taxes, no HST, no closing costs, no rent control, very friendly towards the landlord, and no foreign buyer tax. If you are a foreign buyer, non-Canadian watching this video, you can still, for the time being, purchase with the same deposits in our Calgary opportunities as a Canadian resident, which is a huge bonus. So we've been doing this for a while, and you probably know, if you've been following us for a while, that these opportunities do sell out very quickly. There's a example of the few that we worked on recently. We have a great opportunity that we're doing right now. If you want to learn more about it and find out what the details of that opportunity and see if it's a good investment for you or not, please contact us, call us, text us, 647-371-0110, or you can send me an email anytime, andrew@truecondos.com. I hope you found this video useful. I hope you got something of value out of it. If you did, hit the like button, leave me a comment, let me know you're watching, and don't forget to subscribe. Until next time, happy investing.